This is Chairman's Briefing, where we keep you in the know on metals and money in just a few minutes. I'm Rachel Lee, and this episode is in partnership with Viva Gold and Dryden Gold. After breaking out in early September and hitting a recent high of $4,380 per ounce, gold has finally succumbed to a sharp correction. The retracement has spooked the market, yet appetite remains insatiable as the metal is increasingly viewed as a lifeline amid fear and uncertainty gripping the global economy. Stuart O'Reilly at the Royal Mint has noted that the surge we're seeing in demand has led to exceptional individual transactions, with roughly 60% of existing customers and 40% new customers. Existing investors are notably increasing their average order values and doubling down on positions. Traders have been digesting U.S. inflation data that was delayed by the government shutdown as they gauge the Fed's intent on interest rates. According to CME Group's FedWatch, there is a greater than 96% chance of a quarter-point cut when the Fed meets next week. Now, despite gold's correction this week, Morgan Stanley has raised its 2026 price forecast to $4,400 per ounce, up from $3,300. The bank says that the rally will continue for several reasons, like the Federal Reserve and the rate cuts that are providing a tailwind, with gold historically gaining 6% in the 60 days following the start of a cutting cycle. Plus, a weaker dollar makes gold more affordable for international buyers. And central banks are continuing to diversify their reserves away from U.S. treasuries. Actually, for the first time since 1996, gold accounts for a larger share of central bank reserves than treasuries. ETFs backed by physical gold posted a record inflow of $26 billion in the third quarter, and retail investors are also joining after 2 years on the sidelines. However, Morgan Stanley does leave a warning as well. Demand destruction from higher prices could weigh on consumption, particularly in jewelry markets. Viva Gold is advancing the Tonopah Gold Project in Nevada, which is one of the most prolific mining districts in North America. Tonopah historically produced over 174 million ounces of silver and 1.8 million ounces of gold. Viva controls a large land package with existing infrastructure, including roads, power, and water, which reduces development risk and capital costs. The near-surface oxide deposit is amenable to heap leach processing, which is a proven low-cost extraction method. CEO Jim Hesketh and I talk about the project's economic potential that was released to the market a couple months ago. You can watch the interview above. IAMGOLD is acquiring Northern Superior in a deal valued at roughly $267 million. The acquisition consolidates Northern Superior's land package and deposits, including Philibert, Chevrier, and Croteau, with IAMGOLD's Nelligan and Monster Lake projects. The combined assets is called the Nelligan Mining Complex and will rank as one of the largest pre-production gold camps in Canada, with measured and indicated resources of 3.75 million ounces and inferred resources of just under 9 million ounces. Now, the proximity of the primary deposits supports a conceptual central processing facility fed from multiple ore sources within a 17-kilometer radius. On the same day, IAMGOLD also signed an agreement to acquire Mines d'Or or Beck, an explorer that's further down the food chain. The deals consolidate a significant land position in a premier mining jurisdiction and creates a district-scale opportunity for IAMGOLD. Endeavour Silver declared commercial production at its underground Terronera mine in Mexico. The milestone comes after a successful commissioning phase where both mining and processing operations consistently exceeded 90% of the designed nameplate capacity of 2,000 tons per day, while achieving at least 90% of projected metal recoveries. The company forecasts throughput of approximately 360,000 tons over the next 6 months, with average grades of 122 grams per ton silver and 2.52 grams per ton gold. Dryden Gold announced a new high-grade gold discovery at its Hyndman project and a broad mineralized system at Sherridon. These results continue to highlight the district-scale potential of the company's land holdings as the company targets both high-grade and bulk tonnage opportunities across their property. You can watch our latest conversation with Maura Kolb, president of Dryden Gold, right here. Canada has surged past the United States to become the fourth largest gold producer in the world, driven by a decade of high prices and new mine openings. Canadian gold output has jumped 31% over the past decade, producing about 198 tons in 2023, worth roughly $16 billion. Pierre Gratton is president of the Mining Association of Canada, and he says that the country has been opening gold mines at a steady pace. Recent additions include B2Gold's Goose Mine in Nunavut, Agnico Eagle's Odyssey Mine in Quebec, Equinox's Valentine and Greenstone mines, and IAMGOLD's Côte Gold in Ontario. Now, Agnico Eagle actually posted record free cash flow and reached $1 billion in net cash by mid-year. The company outlined plans to lift output to 4 to 4.3 million ounces annually in the 2030s through internal projects. But the challenge ahead is worker shortage. The industry itself needs mining engineers and skilled trades across the board. The rally in platinum prices in London came as the spot contract hit a significant premium over New York futures, which is a dislocation that is highly unusual and suggests a scramble to obtain physical metal. The move mirrors the recent squeeze in the silver market, where institutional and retail investors rushed to secure the commodity. Dan Galley at TD Securities has said that platinum is tightening heavily with dislocations pushing to extremes, echoing fears of another silver squeeze moment. What makes this particularly odd is that global supply should be plenty. China exported the largest amount of platinum products last month since data collection began, yet liquidity in the system is stressed. The platinum squeeze follows a violent correction in gold earlier this week, adding to volatility across precious metals markets. Traders are now contending with supply stress in multiple metals at the same time. And that's your briefing for this week. If you're not subscribed yet, please do so before you go, as it does mean a lot to us. I'm Rachel Lee, and we'll see you next week.